Hi everyone, this is July 14, 2021, and you're watching the Philippine Market Update. This is Awesome 10X, so let's begin. Okay, so the Philippine markets for the week has actually been falling down, just like for the US market. You're seeing some profit taking happening in the Philippine market. So let's take a look at the index stats. So you've got market value of 4 billion. You're seeing a very low volume in the market, and you're seeing that index movers are relatively half-half, half red, half green. So I'll just read the numbers for you. SM is 1,010, JG Summit is 61.4, BPI is 86.5, Ayala Land is below 36, your URC is 141, ICT is 167, Metro Bank is 49, BDO is 111, and Dell Corporation is 117.9, Pure Gold is 40, Jollibee is 210, MPI is 383, DI is 1020, Ayala Corp is 790, FGen is 29.6, DMCI is 638, Globe is 1974, Security Bank is 118, Aboitiz Power is 24.7, Mega World is 302, Meralco is 275, Robinson's Retail is 56, Bloomberry is 6.61, AEV is 41.3, Robinson's Land is 16.7, Lucia Time Group is 11, PLDT is 1266, and SM Prime is 3505. Your index standing at 6,835. It's very apparent that the property sector as a whole is actually very weak, with Ayala and SM Prime and Megaworld actually on the downside. And let's take a look further at the entire market. Let's take a look at the stats. Analytics, let's go for that. Okay, let's go first to top traded for the day. So in terms of top traded, you're getting some profit taking on ASEN, you're getting some selling pressure on LTG, GMA7, some selling pressure, Mondanisan, some selling pressure, Converge continues higher at 24 bucks, Ever is up 12% here at 46 cents. Most of the companies are getting some profit taking. Your CLI is down to 324. Your Semirar is 17.1, strong up 3%. Your FI is 7.5%. But in general, most of your positions are actually in the red in the Philippine market. Very few winners. The winners are very few. You're seeing the HI green side. You're seeing Ever green side, CNPF on the green side. But in general, a lot of selling. Now, top gainers in terms of volume. So Ever is up with 1,509 trades. Your FA is also up with 1.72. Your Semirara is up, and then CNPF. So very few winners, as you can see. All right, so let's take a look on the entire analytics of the Philippine market. In terms of all shares, so far, this is already July, so we're hitting 7 months. Let's take a look at the year-to-date change, or 6 months. You're seeing that the top gainer for the last 6 months of the year, from January till recently, is about these names: Ever, Prim, BHI, BCP, Land. So although the sector and properties are rising, we're seeing that only the small cap third liners are actually rising. And you're still seeing strength on GMA7, Del Monte, GSMI. So all of these are all micro caps. None of these are index names. Your lone index name that's actually on your top 30, it's not even index name. You've got ASEN, still strong, 40%. Your CLI, and the only index name that fills into the list is ICT with 35% up. The rest are mostly non-index, with Converge actually rising about 50% for the year. So Converge did very well for the last 6 months. Okay, in terms of the largest losers for the last 6 months, let's take a look at that. In terms of largest losers, your Nihao, your MRC, Davin, Marymart, PHR falling 40-50% down. Your Chelsea, your T, your Now. Your Mega World is actually one of the largest losers. You could see a 30% down for the year. And then your RLC is also down a lot, 24%. Your Vistaland is also down 24%. Your PNB is also down 24%. So we can clearly see that the properties in general as a sector is still getting sold down. So let's try to understand why properties are getting sold down in the market. So let's see whether there's news on any of these property names. Take a look on most read disclosures, most viewed disclosures. This week, there's a press release on Double Dragon and a press release on Mary Mart and a press release on Nicolasia and Tech. Let's try to read all of them. Okay. So Nicolasia says the disclosure, they have a penalty imposed due to their on Cagnianao mining. Penalty surges 200,000 pesos for constructing a private non-commercial port facility within Claudia, areas of Claudia and Isan in Barangay Valencia. Okay, that's immaterial, no worries. Let's take a look at this press release on Tech. Sir Tech is saying here that the community garden sows, reaps, and shares. Sir Tech's community garden have finally reaped a produce of green leafy vegetables after 4 months of nurturing what used to be an idle garbage dump area of land. Employees are now gathering fruits from their cultivated garden. This is to share the products by selling to the employees for a very cheap price and donating those went undergoing quarantine for their so-called quarantine pantry. This is organized by the HR and medical team. This is a good thing that Surtex employees have done. Congratulations for that garden of life. All right, so let's take a look on some names. Let's take a look at what the press releases on Converge is. Oh, and this one, the extension of Quintel USA Master Supply says here that Quintel, the unit under Surtec, is pleased to announce the extension of their Master Supply Agreement with two major leading carriers in North America. This comes at a time when a series of new product introductions released by Quintel when 5G is at an inflection point. The 5G products are precisely designed with the customer's network architecture in mind, allowing synergies in terms of backwards compatibility to existing infrastructure, while competing and providing 5G capability at a fraction of the cost against competitor products. So another 5 years with these two telco companies. All right, that's a good thing. George Aguilar is saying, the group vice chairman, Quintel is poised to grow its business in the near to medium term, evidenced by the relevance of their pioneering products, maximizing 5G services, preparing supply chain in the next 3 to 5 years. There is an anticipation to grow CAGR by 32% for the next 8 years, to cross that $177 billion as a total market industry for 5G based stations. All right. Okay, so good news for Surtec on that news. Let's take a look as well on this press release on Double Dragon, just reading through it. Double Dragon is saying here that they are partnering in Central Hub to create the first largest REIT in the Philippines. That is Jollibee Industrial REIT in Central Hub. Central Hub is in Pampanga, is that it? Let's download that. So Double Dragon is signing a 3.97 billion peso binding agreement with Jollibee in Industrial Central Hub. This is a 16.4 hectare. It's going to be the largest operating commissary of Jollibee. That's good. The additional commissary assets will be infused, will increase the total industrial land portfolio of Central Hub to 40 hectares. We are excited to work together with Jollibee, developing Central Hub into the largest landlord of industrial warehouses in the country. We see Central Hub to become a major recurring income contributor to Double Dragon. Not only will this partnership between Double Dragon and Jollibee bring forth many benefits to both sides, will also accelerate Central Hub's goal to become the first and largest industrial REIT in the Philippine Stock Exchange. Okay, so there's going to be a new REIT by Double Dragon. It's going to be the Central Hub, which is an industrial REIT. All right, so we are seeing a successful listing of a lot of REITs. So congrats for this. We'll take a look at how this partnership will go through. So let's take a look further at further news. What's happening with Mary Mart? So Mary Mart has signed an agreement with Carlos Drugs Lucena to acquire a majority stake in a pharmacy chain. Carlos Superdrug is the biggest pharmacy chain in Quezon Province, set to celebrate their 75th anniversary next month. Carlos Superdrug was founded in 1946. Mary Mart is acquiring a minimum post-investment stake of 67% of Carlos Superdrug. It has 27 operating branches to date. Its EBITDA and net income is positive. They want to continue running the operations to make Mary Mart a greater market share in the region. All right, so we are excited to work with the Carlos Group. So this is an acquisition for Mary Mart. Good news for Mary Mart and Double Dragon. Okay, yeah. What is this comprehensive corporate disclosure? All right, so it says here that Vulcan and the majority shareholders of East Coast are authorizing an increased authorized capital stock. So this is to subscribe to National Bookstore, etc. So retail. Yeah, I think the problem here is that the business model of retail is currently not as well loved these days. So it might not be a good backdoor listing time for them, or maybe just a cyclical version nowadays because school is closed. A lot of shops are not really well, not necessarily schools are closed, but definitely a lot of less demand for any bookstores related businesses. Okay. So let's take a look at these news. Let's see. Let's see whether there's news on the downturn of most property stocks. Let's see what the news are on Ali and SM Prime and Mega World, if any. So not a lot of news front. Statement of changes in beneficial securities. It's just been acquiring a lot of reports. They're spending for the South Coast City development. Yeah, in general, I think the businesses of Ayala Land, Mega World, and SM Prime continue to be strong. It's just that the relative thinking of the Philippine market is that they have a lot to grow into, as current levels of properties aren't as bullish in terms of sentiment by the people. But Ayala Land continues to spend almost 90 billion for the development of mixed-use estates at the South Road properties in Cebu City. And they're saying that Ayala Land Estates Vismin Jose Mediano said land development is underway, set to be completed in May 2020. It's also being developed by a consortium with SM Prime, Ayala Land, and Cebu Holdings for the 26-hectare waterside project. This 90 billion pesos would be spent by Ayala Land alone for South Coast City. Let's try to see what this South Coast City is if we're interested to check out the 90 billion peso expenditure of Cebu Holdings and SM Ayala. Let's read this. So SM Ayala Consortium Development in Progress. So Ayala Land is introducing a prime commercial development called District Square, located within the scenic seaside South Coast City in Cebu City. This waterside commercial area is designed to attract spurring new business investments in the province and to create a vibrant community. Our aim is to build sustainable developments with a plan to give in the combined investment plan of both Ayala Land and SM in the South Coast City. So we share this vision in a part of seeing this through. Strategically located along Cebu's South Coastal Road to be accessed and via the new CC Lex Bridge, expected to be completed by 2022. This is designed to link the main areas of development and 1.1 hectare civic park. It will be their centerpiece, with arena and convention center also planned. So this is the entire site development progress. This is actually good to see from Ayala Land's perspective. So this is what their plan to do is. It's an SM Ayala development. Looks good. So you can see that they're on track for their zero footprint in 2022. They're actually still the largest developer in the entire Philippines. So nothing wrong. I think I saw that there's also a POGOs coming back to Manila. Let's take a look at that. So this one, let's just read this news. David Leach, who is, of course, a preeminent real estate firm in the Philippines, and they're saying here in a news report, the demand for office spaces are returning. The exodus of POGO companies that are characterizing the woes of Metro Manila office sector has ended and demand for new space is running. This reversal was partly due to the new legislation addressing tax compliance by POGOs, whose operations are mainly targeting gamblers in China, the potential easing of international restrictions as COVID-19 vaccinations ramp up. Sector is also receiving a powerful boost after Duterte. President Duterte said last week he's banking on the offshore gaming sector to raise funds to support the country's pandemic response. We're starting to see a number of POGO clients coming back. Latest data is showing that there are talks of about 17,000 square meters of new office space within the second half of 2021. This could be just 5% of the expected 330,000 square meter that could be leased on the second semester of the year, the bulk of which will come still from IT and business process outsourcing. This will compare to a major contraction led by the POGO sector since the start of 2020 and up to the first semester of 2021. During that period, POGOs vacated 454,000 square meters, 50% of the decline, while IT and BPOs dropped 131,000 square meter and other businesses accounted for 333,000 square meter. This exit of POGOs slowed sharply since then due to the Senate Bill number 2232, clarifying taxation on offshore gaming operations. Okay, so also you're seeing that another explanation for the demand on POGOs coming back to the Philippines is Dubai, Romania, Malaysia, Thailand, Vietnam, and Cambodia couldn't absorb their capacity. So overall, office demand ended at 291,000 square meters for the first half of the year, and there are close to 600,000 square meters to be negotiated, or 54% larger than 2020 when that happens. Another demand driver is, of course, the work from home arrangements are finally winding down. Your workload has been cut in half by this crisis, but the workload, if expected to go back to 100%, will balance the demands of home life and responsibilities of work at home. Okay, and return to the office. Okay, so property prices in key business districts have also returned to pre-pandemic levels, although rental rates in areas such as Alabang, Manila Bay, and Pasig remain significantly slower and lower due to the slowdown of the POGO sector. Okay, so yeah, let's just read a lot of news in the Philippines segment. Says here that PLDT and Smart are also lobbying for lower regulatory fees. Industry giant PLDT wants to incentivize expansion of the underserved areas across the country, and the wireless subsidiary Smart Communications is trying to implement affordable and reasonable regulatory so that they can invest more and channel more towards building network infrastructure for a more connected Philippines. So this was spurred by a recent hearing on the Open Access and Data Transmission Act hosted by the Senate Economic Planning Office. If the goal of the bill is to ensure universal internet or data coverage, it must avoid the trap of not setting out the objective in the law, ensuring that data facilities and a much-needed fiber find their way to the underserved areas. So this is actually positive, not just for PLDT, but also for Converge and Globe, in general, the industry. So IBA said they could also expand in areas lacking coverage via the removal of roadblocks and costs imposed by certain local governments, such as tower fees, inspection fees, and audit fees. Smart also wants to begin charging a uniform spectrum user fee based on per kilohertz per population. This would replace the prevailing wireless broadband formula, which discourages and punishes deployment for more wireless facilities and using a per station per kilohertz station. Last year, Smart spent 2.4 billion on fees, which could have been spent on actual physical facilities to improve telecom services. PLDT earlier allocated a capex of 88 billion pesos up to 92 billion pesos in 2021. They recorded a core profit of 28 billion despite the COVID-19 pandemic. So it actually just tells you how resilient the PLDT arm is. Okay, let's take a look at these types of charts, the ones that we have been reading. Okay. So let's take a look at TEL. Who's this? TEL, PLDT. So 52-week low of PLDT and 52-week high, it's stuck within a 300 peso range. So that's about 1.2 to 1.5. So far, we've always been seeing that range-bound movement on PLDT. And so a low of about 1.2 is actually a grand opportunity to enter that PLDT name. 1.250, 1.240, start nibbling in. Today's close is 1.266, nearing the support area. So you need to see a retest somewhere here and then a buying opportunity there for PLDT. Also a lot of selling pressure here at 1.460. Every year, it always is in a range. So with the sector actually very resilient with 72 pesos of dividends every year, you might actually consider this because it's still a 6% dividend yield no matter what happens and quite resilient. Okay, other than PLDT, let's understand what's happening. So Ayala Land is actually still within a small range. You're seeing that the range has been stuck within 32 and 38. While I'm not sure if you can get this to about 34 area, I think that any drops near 34 is already good enough for Ayala Land. So those who have Ayala Land can actually nibble, especially within the 34 areas. It's doing 35.95. See if there's any dips that could enter, but no this is just a normal profit-taking movement on your Ayala land. Same thing for SM Prime and your Mega World. So let's take a look at the entire property segment. With POGOs coming back, actually, SM Property doesn't really have any incentive to win there. Only Mega World, perhaps. But it will still be a good thing for the sector because the world is reopening if POGOs are actually coming back to the Philippines. So SM Prime here at 34 pesos also has a lot of strong support, as well as, of course, 32. 32 to 34, SM Prime and Ayala land, almost the same support area with 38 above as their resistance. Now, in terms of Fly and Meg, they could be beneficial on this resurgence of BPOs and a lot of POGOs yet again. So you're seeing actually Fly actually still going up, but some resistance perhaps here at 1.23. And then 1.41. So it still hasn't gone back to pre-pandemic levels, but you could see that it's trying to shape up into a higher but slower recovery. Phil Invest, Mega World is still at 3 pesos here. So you're seeing that Mega World is on the uptick when it comes to office demand with the largest office REIT in the country. So 3.46 and 2.82, any drops here is actually a potential entry to buy. If you bought tonight, I'm actually not going to be surprised. 3 pesos, we do think that's a good entry point. So do check out our Mega World M-REIT deep dive. So we think that this is actually more of a good opportunity. Take note that these drops are actually similar to the support of Mega World here at about 320 to 280. So you heard as well, Double Dragon is working with industrial hubs. Let's take a look what happened to Double Dragon. Double Dragon continues to fall on a slide here at about 1156. So it's possible that the market is not thinking that the common shareholders are going to benefit, but mostly only the DD REIT shareholders. So the DD REITs are DDMP, right? DDMP REIT. DD REITs are still steady here at about 2 pesos, but still actually more on the unchanged areas. How about Ayala REITs? Let's take a look at that. Your Ayala REITs somehow at least up. And then what else? So your DD REITs, your Ayala REITs, your Mega World REIT is not yet listed. Yeah, so let's take a look. So your CLA is, of course, the Cebu. Cebu land has gone up, Land Masters, from about 2 peso back to 440. Had a consolidation, a profit-taking move here at 3. Quite a lot of volume on that sell-off. But so far, it's still above the trend. So this is still in an uptick. Let's see whether it can get supported about 280 or $3. So within the 280 to $3, there could be buying pressure on CLI and also on Mega World. What else can we say? Oh, Robinson's Land. Let's take a look at all the properties here. So Robinson's Land also falling from 1850 or 19 all the way to 1672. I wonder what is causing this entire drop in the entire property sector. But I'm of the more bullish note that these properties could actually be more of a buying entry rather than a selling area. So take a look at any drops at 1550. This could be an entry opportunity if Robinson's Land falls. Robinson's Land, Mega World, Ayala Land, SM Prime. Have we covered everyone? Oh, I forgot. Vista Land, yeah. So let's take a look. Vista Land also still in the dumps, hasn't risen. So in general, the properties are still way below their pre-pandemic areas. This is 2019, 2020. You could see that Vista Land continues to trade at about 40-50% from its current from its prior peaks of 6, 7, 8. So here about 3 peso 30 cents, you've got a support. We'll see how the market will navigate this. But generally, we're seeing weakness on the entire property sector itself. So let's take a look at properties as an index. So property as an index is falling down, right? So strong sell-off. You had a low here at about 2,950 on the index of property, and then a strong resistance here at 3,800. So right now, we're still seeing a lot of resistance here at 3.4, but I'd say that any drops of property could be actually seen as a support. So, but you'll probably see it move as a sector. So we might see temporary weakness if you're just basing on technicals, but try to find these technicals buy signals similar to this uptick and this uptick. Perhaps a level from about 3,000 area on your property sector could actually be bullish. So maybe an 8 to 10% slide on the entire property sector is enough. So example, Even if Mega World is 302, if you want to buy 302 until 270, you can already start nibbling. So I think like the downside is just 10% for these names, for Ayala Land, SM Prime, and so forth. Okay, so let's take a look at any of your questions. No deep dives today. Okay, hi Nikki, ASEN and All HC. All right, so let's discuss those charts. ASEN looks to be quite strong, but in general, the problem is I think the market can be over confident on the movement on ASEN. I'm just thinking that this surge to about 9 pesos hasn't been met with any significant news flow. So the changes of 7 to 9 or 30% higher might actually be a profit taking area. So I'd still say that there might be some selling pressure. So I'm leaning more on having a more cautious area at 9 to 10 rather than being bullish all the way. As for All HC, let's take a look at that. This is a company that is trying to do logistics. So similar to what Double Dragon is trying to do, industrial hubs. So the market is happy on All HC, seeing that it's surging near all-time highs, defying the entire defying the entire industrial real estate sector in the Philippines. So you're seeing that the market is already considering Ayala Land Logistics more as a logistics play rather than as a property play. I think Logistics Holdings also shared that they're doing the cold storage freeze. Let's read that news for All HC. Storage, right? So let's go to their homepage. They said that they acquired a cold storage facility last April 13. It's in Laguna. They're diversifying into a cold storage facility. So building meaningful partnerships for continuous growth. The market is happy on All HC, seeing that it's leading developer and operator of industrial parks, a major player in real estate logistics in the Philippines, seeing that the major vision of the future is a lot of logistics and e-commerce. We can watch this.
A year of change. A year of the great reset and transition. Of
So-
enterprises in continuous motion.
You could see,
Supporting businesses to stay strong and healthy as a co-catalyst for
so they are getting a premium valuation because they are building warehouses for the future of e-commerce. This is Ayala Logistics, embracing challenges for growth, supportive, cooperative. So ASEN and All HC are generally in the right secular trend because the stuff that's actually helping merchants today is almost always e-commerce and all of the platforms supported with GCash, a lot of cashless payments. I'd say that the market is already very happy with what All HC has been doing, and it's just really a matter of being late if you're buying. So I'd say that the people who are already in it are just happy to hold on to them. But I wouldn't say that All HC is in a buy zone today. Neither is it also an attractive area to be buying at these levels. So you could see that the buy areas, if you don't have it yet, would be somewhere here at least at about 3 peso 50 cents. So at the very least here when it broke out here, after they broke out here. So either you've been buying somewhere here at these levels on this first breakout after that consolidation or this consolidation. I think in general, everyone buying above 4 is already nearing I'm not saying that it's topish, but it could be topish given that there are also still resistances. Even if you see that all-time high, I'll be still very careful because all the prices could be pricing in all the good stuff already. All HC is nearing the top. ASEN is also nearing the top. Should be actually more cautious rather than aggressive in my view. Thoughts po on Lucia Tan Group's decline, LTG. All right, so with LTG, this could be a function of their Fortune Tobacco. Not quite sure because my familiarity with Lucia Tan Group is that the main business is still cigarettes. It's possible that there could be a cigarette smoking ban, or well, not really a ban, but just less cigarettes being sold. I don't find cigarette smoking actually a secular trend winner. So that forces me to stay away from Vice stocks. Well, technically speaking, it's just a personal bias. I'm not saying that Vice stocks aren't good. It's just that I prefer not to touch cigarettes. I'm weird because you'd argue that I made a deep dive on Emperador, which is actually a liquor company. Alcohol is also a vice, but I'm more open to alcohol rather than cigarettes, perhaps. So I'm just that biased, personal bias only. I'm not really against people who are smoking. Okay, hi ma'am Nikki. Thoughts of Asen? Already answered that. Jimmy 7, Monde. Monde Nissan, I think, has surged to 16, 17. What you're seeing only with Monde is just really profit taking. I don't see any strong reason for it to fall, but this is just normal profit taking. However, a profit taking could mean that Monde Nissan has already reached the top for the year because as you could see, when it was trading at 13.5, we argued that Mondenisen as a company is a wonderful company if you're going to hold it for 10 years. Nonetheless, if you hit 20% already for just a few months, you should actually be profit taking because Mondenisen is the kind of company that just manufactures your pancit canton, your biscuits. So as a company, I think a growth of about 10 to 20% for the year is already good enough. And what you're seeing with Mondenisen is just a normal, healthy profit taking. Some people are just wary of the valuations of Monde, but has nothing wrong with the fundamentals of it. Jimmy 7, I think priced for perfection as well. The problem with these names is that the drop could just be profit taking already after a strong surge. So you're seeing already that the market has priced in the advent of new talent, new stars, the domination of advertising in the Philippine elections, of Jimmy after the passing of after the non-franchise renewal of ABS, I wouldn't actually be buying Jimmy 7 at current levels. Thoughts? So yeah, on the return of Pogo, I think that's a huge positive, most especially for Mega World. Actually, for the Philippines, I'm not really a momentum. I'm just really trying to position on companies that I could buy and cost average. So, for instance, if I've been bullish, example on Mega World, like $3, it's okay for me. Even if it goes 2.7 or 2.8 or 2.9, should be okay for me to just cost average. With Modenese, example, if I like it, if it falls 15 all the way to 14, it's okay. Yeah, I'm just mostly just a buy and hold kind. But if it reaches a certain target, like for Mondenisen, I really said that about 16 to 17, if it reaches there, I'm willing to take profits already. So for Mondenisen, I had to take profits already. Where do you think the PSCI is headed for Q3 and Q4? A lot of that would depend on the company's earnings per se. And of course, the entire world is really happy for reopening. But of course, there's going to be also those Delta variants. So I'll say that the Philippine market's economy will really depend on gas-gas na to, pero it's still going to depend on what the company's specific earnings would show. So they would actually have to show some cash flows. I'd say that for the third quarter and fourth quarter, you should expect resilience, of course, for your telco sectors, resilience for your consumer sectors. I'm not talking about consumer sector in general, but I'm just saying that if you're thinking of reopening, you would assume that your Jollibee fast foods, your restaurant industry would somehow be better off 2021 versus 2020. And so your shopping malls would have more traffic than before. So I'm just saying that as a sector, the entire Philippines, the malls will reopen. I'm not saying will reopen. They are open. It's just that there are still less shoppers. But I do believe that the Philippine market as a whole would benefit, whether that be department stores, whether that be properties such as your malls. So SM Prime should benefit. Your Ayala Land should eventually benefit. So it's cyclical. It's cyclical, but the cycle allows you to actually trade onto it when people are very bearish on the fact that people won't travel again and stuff. You can actually always buy Cebu Pacific. Now that is about 46, 45, those types of things. Converge is in a secular winner. So that one is you can actually for Converge and Ascen and All HC, you're seeing that the market is already pricing in their favorite secular trend winners. So with favorite secular trend winners, those are just expected to go up, and every drop it will get bought. So I wouldn't be very bearish about them. It's just that the valuations today might actually be pricing in their dominance already, while hindi siya underdog. It's already a crowd favorite in my view. Um, as for DD REITs, I'm not sure if it will be connected to the POGO because so far what we know with DD REITs, okay naman. It is a beneficiary of POGO because DD REITs are in Meridian Park. So, and also with DD REITs, I think that DD REIT is a company that's just getting about 4 to 5%. Occupancy is about 95% in that area. So it's just going to stay there. So with REITs, I don't expect a huge move, but with REITs, you're expected to get 4%, 5%. It's possible that the REIT segment, however, is only for people who are just replacing their cash to bonds. For example, if I have 50,000 pesos, I could put it into cash, which yields nothing, or I could put it in a PLDT, get some 5% yield at 1266, not so bad. In terms of yield comparison, I think the yield of DD REIT is quite similar to PLDT. So some people might actually find the cash flows of PLDT more resilient because internet is an essential. So it's really up to each person's appetite. There's still demand, in my view, for the Philippine stocks, but I think that the demand is mostly on global entities. So example, Emperador, we made a deep dive on them. Jollibee, also global entity. I'm not saying that they are really better, but I find myself more in awe with how Emperador has been growing their liquor sales, not just in the Philippines, but also abroad. What I'd like to see from Jollibee is to concentrate on their sales growth abroad as well. And they're doing that with their expansion. We will see, however, that the domestic consumption is still a great story to tell. SM Prime is a function of two things, a majority of which are the Philippine malls, and of course, a majority as well now growing in China. So I like diversified revenue base. If possible, that's why I advertise the likes of URC. Because URC, if it falls 140, 130, I think that no matter if the Philippine economy is slower to recover, the nice thing is that I think the worldwide vaccination is on the way. It's very strong, actually. And I'd say that for Southeast Asia in general, despite the ongoing Delta COVID variants as well, we will recover. So it's up to you how you want to interpret. Some people would buy consumer staples, so they'll often just buy URCs because they like junk food, they like household brands. Yeah, so I think those are the more there's nothing wrong. Like you could see that my picks are already in the deep dives. So like renewable energy, balancing the mix. I think that the Philippines has no choice but still rely on coal. I also said that Petron at 350 looks okay because you still have to, I mean, you can't just go solar. I understand that we want to go solar, but it's not as if we can just neglect oil, no matter how dirty it emits carbon dioxide emissions. So, I mean, at some point in time, you just have to really be balanced in your portfolio. So, hope that you guys have a good evening, a good afternoon, and see you again. Bye bye. Thanks. Thanks for watching. Do like and subscribe. Bye.